You have central banker collusion supporting one another's worthless paper currencies with more worthless paper currency reserves. It just doesn't end well.
Hey guys, thanks so much for tuning in. I've got a very exciting call here for you right now. On the line is the president and director of K92 Mining, Bryan Slusarchuk. And guys, I got to tell you, this is a company that's about to IPO with gold production ready to begin, I think, in June. Bryan, correct me if I'm wrong, with a cash cost of $600 an ounce. Bryan, thanks for joining us.
Great. Thanks for having me on.
Did I get that right? Is your cash cost on gold production going to be somewhere in the neighborhood of $600 per ounce?
That will evolve over time, but what I can say is that we're definitely targeting to be in the lowest quartile of production costs in the industry. That type of number that you referenced is in that lowest quartile. So that's definitely what we're targeting. It will evolve over time, but what I'd like to highlight is the fact that this is a very high-grade situation. It's got significant size, and because of the substantial infrastructure invested previously by Barrick Gold, at the time the world's largest gold miner, this is a restart of operations. There's an existing mill, existing mine infrastructure, and we just couldn't be more pleased that we're on the cusp of production.
Guys, I just want to restate here, the reason that I'm having some of these calls with some of the top people in the mining industry is because we have seen gold mining stocks and silver mining stocks on an absolute tear. Fortunes are being made. I've just heard word that Eric Sprott has taken $50 million to put into junior mining investments so that he can prosper from what's coming. I have a personal friend who's turned $50,000 into $300,000 in First Majestic. Fortunes are being made. And Bryan, just tell us quickly about this IPO. You guys aren't even public yet, are you?
No, we're not public yet. We anticipate to be trading over the course of the next few days, in fact. However, I do think it's important to note that we've been a private company that's been advancing this project for the past 2 years. We've raised significant capital as a private company, and before the gold bull market started, or restarted is perhaps a better phrase, we were able to advance the project privately so that as we come out and commence trading, we'll also be a long ways towards that restart of production that you mentioned.
I want to ask you one important question, Bryan, for my audience. I just want your perspective on it, because we know that Bernanke and the central bankers and Yellen will tell us that gold is just a tradition.
Do you think gold is money?
No.
It's not money. Even if it has been money for 6,000 years, somebody reversed that and eliminated that economic law.
Well, it's an asset. I mean, it's the same. Would you say Treasury bills are money? I don't think they're money either, but they're a financial asset.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Well, some people still think it's money. I yield back. My time is up.
Yet history tells us so much more. Is gold money in your eyes?
Absolutely, and I think, in my opinion, gold will be around and will be money when the dollar, the euro, etc. are just memories. And one of the best phrases that I've heard as to gold, and I go to sleep thinking about it, is that you don't buy gold. You exchange intrinsically worthless paper for real money. And gold is absolutely money, and it has been for 5,000 years. It's only in the past 100 years that some central bankers seem to have lost sight of that fact. And even in recent times, in 1980, gold was at $800, and the Dow was at 800. In 1934, gold was at $36, and the Dow was at 37. Where's the Dow today, and where's gold today? As Pierre Lassonde, who's just a legendary gold investor, is the chairman of Franco-Nevada, the former president of Newmont. As Pierre Lassonde says, will that ratio get back to 1 to 1? Well, hey, even if it gets to 2 to 1, that's still $8,000 gold. And I think that as investors in gold, we have a lot to be optimistic about because I think that the world is catching on to the fact that for 5,000 years, this was the only real store of true value.
Yeah, that's right. And, I mentioned Bernanke because, of course, he famously stated in front of Ron Paul, when Ron Paul asked him why central banks hold gold, he said it was a
tradition. Long-term tradition.
Which is, of course, laughable. And regardless of what Bernanke says, believes, or otherwise, we see a transformation geopolitically taking place right now, regardless of what Bernanke thinks. The Chinese are getting their hands on as much gold as possible. And in fact, we're seeing a transition from the paper metals markets like the LBMA and the COMEX into real physical precious metals markets like the Shanghai Gold Exchange and the Shanghai Futures Exchange. What do you think is the significance of this development, of the move away from the LBMA and the COMEX?
Well, it's interesting, and as you probably know, the term Shanghai refers to the 19th century practice where sailors were forced to serve against their will on vessels bound for Shanghai and other ports in China. And I think that it's very clear right now that we're being Shanghaied as a Western economy. Why do central banks hold gold? Well, they're supposed to hold gold to store value and as a guarantee to redeem promises to creditors. In Canada, where I'm based, we now have no gold. What do we have as a central bank policy? We hold $48.6 billion in U.S. dollars. So we're supporting our fiat currency with another fiat currency. And for the first time since 1935, Canada has no gold. And I think it's very important to recognize the fact that the central banks around the world have disregarded gold in these Western nations, whereas it seems like China and some countries like China understand that gold is the only way they can store value and guarantee to redeem promises to creditors. And we're doing the opposite of what they are. And I think, quite frankly, they're right. They're getting their hands on as much gold as possible as Western nations have central bankers colluding together, trying to prop up each other's reserves with equally worthless foreign currency reserves that are fiat-based paper. It's really, and this, unfortunately, I just don't think ends well for Western countries like the United States and like Canada who have lost sight of this.
You mentioned a very important word. You used the word collusion, and I think you're absolutely right. And I think the genie can't be put back in the bottle. People can see what's going on. Those of us, at least, who are paying attention. I mean, a lot of times we'll talk about what Gordon Brown did with the gold at the very bottom, selling it out at, $250, $260 an ounce. And on the other side of that trade was a very smart buyer. Was it the Rothschilds? Was it other central banks? Who knows? But obviously, somebody got a great deal on all that gold that Gordon Brown famously sold at the very, very bottom. The point I am trying to make is that on the other side of these gold sales, like Canada selling all its gold, there are buyers on this planet who do recognize that gold is money. And I guess I should bridge over real quickly to the hyperinflationary currency collapse that is happening right now in Venezuela. I want your thoughts on that. The chaos we're seeing in Venezuela is very frightening. And do you think there are any lessons that Americans and Canadians can learn from what we're currently seeing in Venezuela?
Sure, absolutely there are lessons. And as you know, it's just been in the past short while that a 60-day state of emergency has been issued in Venezuela. Just over the past couple of days, the opposition has threatened the military in Venezuela. It appears to be spiraling out of control, and this all results from the fact that you had bankers that didn't understand how to ensure there's a real worth to their fiat currency. And I'm afraid that this lesson is a lesson that we're going to figure out once it's too late. You know, as you know, some 60 65% of Americans now receive more in federal transfer income than they pay in total taxes. There are estimates that can grow to 80% in the not-too-distant future. So when you have a situation like that that's just clearly not sustainable, you have central banker collusion supporting one another's worthless paper currencies with more worthless paper currency reserves, it just doesn't end well. And that's why I think it's so important for investors to consider, not just for the upside, but for protection, for safety, that investors consider gold and silver as a part of their investment strategy. And when things don't end well, I'll tell you, it's going to be very worthwhile to have that real store of value. And I think people in Venezuela are seeing that today. And you've seen that in other countries, obviously, also, like Argentina. History continues to repeat itself, but the central bankers want to assure us that everything's okay, that gold no longer has real value. But like you say, there's somebody on the other side of that trade, and as groups and governments in places like China continue to gobble up whatever they can get their hands on, you've really got to question what side of the trade you want to be on. And your example as to Gordon Brown's gold sell-off, which was precisely at the wrong time, there was smart money on the other side of that trade, and the smart money did very well, and the smart money was on the side of the gold trade. And I think Venezuela is just a great example of the hyperinflationary currency collapse that all countries potentially face when they don't have true holdings as a store of value that act as a guarantee to redeem promises to creditors.
Well, that's absolutely right. My next question for you is about the future of the dollar as you see it. But before we do that, I want to ask you this. You mentioned mining stocks and physical precious metals as a strategic part of an overall portfolio. Many of my listeners, me personally, were once bitten, twice shy on mining stocks. We got hurt bad, those of us that held mining stocks through this 5-year downturn. One of the pundits that I speak with regularly, in fact, Andy Hoffman, has completely sworn off any stocks whatsoever, mining stocks at the bottom of the barrel in his opinion. So just real quickly, what is your thought on people buying the GDX or the GDXJ as opposed to or in addition to buying specific mining stocks like K92? How does that fit into a portfolio, and what percentage should people be thinking about allocating resources to mining stocks when we've already seen the GDX pretty much double in 2016?
Sure. And I think what we have to do is, again, look at history and what does history tell us. And consistently what we see historically is that the best leverage for investors in a rising gold market are gold equities. And whether it's K92, which I think is just very compelling due to the high-grade nature of the gold deposits, due to the imminent production, and due to the sheer size of these deposits within K92, or whether you're looking at other gold equities in production or in the development stage. These give you the best leverage to a rising gold price. At the same time, what I would point out is that there's a big difference between owning companies that are at the exploration stage versus companies that are near-term production or in production. Because we have such a strong management team with such a strong track record in gold, in silver, we were able to privately finance this company for the past 2 years and advance the project during a tough time in the gold market. And that's why we're the first issue of this type in this new and coming gold bull. And because of the fact we were able to advance this project, we're no longer at a concept stage or an idea stage, we're targeting near-term, high-grade, and sizable production. And that's what we've worked on for the past 2 years privately. And investors coming into K92 now benefit from that 2 years of work and financing because they've got imminent production targeted, and it's high-grade gold production that we're targeting.
Tell us just real quickly, how much gold is in the ground?
Sure. What we've got is we've got 1.84 million ounces of high-grade gold. 1.84 million ounces at 11.6 grams per ton inferred, and 240,000 ounces additionally at 13.3 grams per ton indicated. That is what's 43101 compliant now. However, it's important to point out that these deposits are wide open at the extent of all drilling. Not only are they wide open, they're strongly mineralized at the extent of all drilling, and that's why technical team members such as Doug Kerwin, such as Alex Davidson, think that the potential for expansion is just so significant here.
I'm thinking as you're speaking, and certainly as it pertains to this bull market, Bryan, you tell me if you think I'm wrong, it's not too late, is it, for people to jump into mining stocks, even if you just want to go with an ETF like the GDX? It's not too late, is it?
No, absolutely not. And I heard a great analogy just the other day likening this bull market to a baseball game. And a really astute commentator noted that he thought we were in the first inning. A more astute commentator on the same panel noted, I think we're in the national anthem stage. And that's highlighted by the fact that guys like Pierre Lassonde, who's a legendary gold investor, the chairman of Franco-Nevada, talks about $8,000 gold. If Pierre Lassonde is right and we're on the cusp of $8,000 gold, we're very much at the starting stage here with gold currently still under $1,300 an ounce.
Yeah, and I want to flesh that out just a little further, because if we're at the national anthem stage, and I think that's a pretty good metaphor, it's also because the Federal Reserve note still holds so much value in terms of its global status. And so I want to ask you about the future of the dollar in your mind. John Williams from Shadow Stats has said that a hyperinflationary collapse of the dollar is now unavoidable. For a long time, he thought it would start in 2016. It appears now that perhaps it won't, and thankfully so. We don't wish this collapse on anybody. I think it's going to be terrible. Do you think that it could ever get as bad in the United States based on a hyperinflationary collapse of the dollar as we're seeing in Venezuela?
Sure. You've got a Federal Reserve that's spent more than $4 trillion trying to prevent a U.S. dollar collapse. You've got guys now not talking about quantitative easing round 4, they're talking about quantitative easing infinity. And at the same time, you have 60 to 70% of Americans receiving more in federal transfer income than they pay in total taxes. How is that sustainable? And what does the U.S. actually have as to gold reserves backing up as a store of value and as a guarantee to redeem promises to creditors? That's the million-dollar question. What we do know is that countries like China are gobbling up everything they can get their hands on in terms of gold, while the U.S. and other Western nations like Canada continue to try to throw more and more fiat currency at the problem. How does that not lead to a hyperinflationary environment is my question, not will it?
Yeah, we agree with you, Bryan. And again, if Bernanke believes that gold is nothing more than a tradition, then it's a tradition that the Federal Reserve seems to be moving away from. I mean, we haven't had an audit of Fort Knox since the 50s. And regardless of, again, what Bernanke thinks, gold is very clearly moving from west to east. And China and Russia and other nation states are moving away from the dollar simultaneously. All right, well, Bryan, thank you so much for your time. Before we let you go, do you want to just give us your final thoughts on this upcoming IPO for K92 and tell us anything else that you want to share about the company?
Sure. K92, which is slated to trade in Canada with the symbol KNT, is an emerging new gold production entity, high grade, significant size, and an all-star team around the company that includes the former executive vice president of exploration and corporate development worldwide for Barrick Gold, that includes a fellow that is also the chairman of one of the world's highest grade open pit copper mines, that includes as CEO a fellow by the name of Ian Stalker, who took a uranium company called Uramin from a microcap situation to a $2.5 billion takeout in less than 3 years. So we've got a high-grade gold asset. It's significant size. It's in a great jurisdiction. And we've got a management team with a track record of success, not only operationally, but also corporately in terms of M&A, in terms of making sure shareholders get real value for what's in the ground. And what's in the ground here, remember, is very significant. High grade, significant size, great jurisdiction, and existing infrastructure, including underground mine, mill facilities, short distance to a seaport. We're in really good shape here.
All right, Bryan, thank you so much for your time. I very much appreciate it.
Yeah, thanks so much for your time. It's an exciting story to tell, and I really appreciate the opportunity.
Well, it's been my pleasure. And guys, thank you so much for your support. We really do appreciate you. Thanks for listening. Have a great week.